Today, we're going to talk about preparing and presenting offers. Although today we're going to be talking in the context of buyers and how you and I, buyers, will be putting our offers together for the sellers, this is also good for sellers to listen to as well, because we're going to be talking about the key terminology that we buyers are going to be putting into our offers to be presenting to you. So this is a great conversation to listen to, not only for buyers, but also sellers. But I'll be speaking in the context of me consulting you, the buyer. Okay. In another episode, we're going to be covering the buying process in its entirety. But for today's discussion, we're going to be talking about what features we can build into our offer that will not only get the attention of our sellers and listing agents, but will also get our offers accepted by sellers, even in a competitive market or a competitive situation. So again, to set our conversation here for today, we've already gotten pre-approved. We do that before we go out and look at homes, right? We'll talk about that in another episode. We've already done our house hunting, and now we have found the one. This is the home, and now we want to write an offer on this home. So this is our starting point for today's episode. Preparing and presenting offers. So there's several documents that we need in presenting our offer, but we begin by going back to the approval letter or the pre-approval letter. Okay, pre-approval letters do expire, and depending on how long we've been looking for a home, what I'll ask you to do is say, okay, we found this home, we want to write an offer, great. While you're on the way home and I'm going back to my home office to start putting this together, I'm going to ask you to call the lender really quick and make sure that everything is updated with your pre-approval, because they will expire over time. Just make sure that everything is the way the lender wants it. Nothing is expired. It's good. And we're ready to go. And the most important point that I want to make out of this discussion today is that the highest priced offer is not always the best. Now, that seems to kind of go against our logic. We're like, because we're thinking, okay, sellers want to get the most money for their home, which is true. So why wouldn't the highest priced offer be the most attractive offer? Well, quite simply, we want the offer to appraise. Okay. It really is that simple. So I'm just going to throw an easy example out there. Let's say we're looking at a home that's $275,000. If we come in at $375,000, is that really going to be a good offer? Although it sounds amazing, we came in $100,000 over asking, and I'm exaggerating here. Well, it really isn't, because that home is not going to appraise for $100,000 over the asking price, or even 75 or 50, right? And again, this is going to be a reoccurring theme as we go along here. Every property is unique. Every situation is unique. So it doesn't apply in 100% of the time. But in general, the highest priced offer is not always the best one, because what we're looking for is we want to prepare and present a clean, strong offer that works best not only for your needs and timeline, but is also attractive to the seller. So we see the house, we're ready to go. I give you the advice, please contact your lender on the way home. I'm going to head back to my home office. I'm going to start putting this offer together. And I begin by running a market analysis on the subject property. Okay, just because a home is listed at a certain price doesn't mean that that's the price it should be. Sometimes agents have underpriced a home. Sometimes they put it right at market value where it should be. And sometimes agents have overpriced a home. I know a lot of agents that when it's a seller's market, they just automatically say, we're adding $40,000 to the sale price because it's a seller's market. I don't subscribe to that. I like to be data driven. Okay, that's just me. But it's always good for me to go back and to run a market analysis on a subject property and verify that what they're asking for is indeed a reasonable price, or at least at market value. If it's above market value or below, I will know at the end of running that analysis. Okay. And then we're, of course, going to have a conversation. We're going to talk about where that lands. Again, every property is unique. Every property is different. And then we're going to talk about the important details such as occupancy, earnest money deposit amounts, the home inspection, due diligence, overall timeline, which I'm going to get into here in a minute. Next, we will discuss the different terms and features that we can integrate into our offer, especially if it's a competitive situation. So, after I've performed the market analysis, the next thing I'm going to do is I'm going to go back to the listing. Now, when we go out on showings, I always print the listing into disclosures, right? And we talk about it. We've looked it up before we went there, but now that we found the one that we're going to write an offer on, now we're going to take a closer look at the listing. Okay, instead of just kind of a general view of it in the broad strokes, now I'm going to go back, and I think it's a good idea if you go back also and look at the more specifics on the listing. So there's a few key things that we're looking at when we begin to prepare our offer. The first thing I look for is occupancy and possession. Some sellers may need some time to stay in a home after closing to give them some time to move. There's a couple of options that we can offer here. We can give them free occupancy or we can charge them a per diem rent. Each situation is unique, and depending on that situation is which one we're going to go with. So let's just talk about that a little bit. So, Brian, what does that mean? Free occupancy or per diem rent? Well, per diem means per day. Okay. Under standard occupancy, I look at the listing, and the listing says the seller needs to be in the home 14 days after closing. That really is about an average. Okay. So, when we look at that, we to determine a per day for those 14 days that the seller would be in house after closing, what the title company does is that they take your new mortgage payment, buyer, and they divide it by 30, and this includes your insurance and everything else, okay? They take your new mortgage payment, divide it by 30, that gives us a per day rate or the per diem, okay? And that's would be your standard occupancy where you would charge the rent. Now, if we're in a competitive situation and we want to set our offer apart from others, we may want to offer free occupancy where we don't charge anything for the seller to stay in the house. So if they need 14 days after the closing, we can say, hey, that per day rent is really not a big deal to us. Like, we're okay. We can absorb that. We are offering you 14 days of free occupancy after closing for you to stay in the house to give you some time to move. So we have free and a per day rent, depending on the situation, depending on the competitive nature of the environment, would make sense on which one we would go with. Now, if the seller is staying in the home after closing during their occupancy period, one thing that is in my purchase agreement that I also like to write into is a security deposit. If we give occupancy to the seller, I recommend that we write in a security deposit to be held from the seller's proceeds at closing. This is similar to a rental security deposit that is intended to compensate you if something gets damaged while the sellers are moving out. Okay, does that make sense? The seller is in the home for 14 days after closing. We show up for the key exchange, which we'll talk about later. And let's say that there's someone put a sofa leg through a wall in the hallway that wasn't there when we closed on the home, right? We didn't see that at our final walkthrough before closing. Okay, that drywall repair is going to cost X amount of dollars. We have the security deposit similar to a security deposit in a rental agreement, or if we're doing a per diem, it would be, right? And so we can say, okay, we need to keep $100 to make this repair. And so we would write on the key exchange at that point, whatever we agree to all together, like, okay, X amount of dollars are going to go to the buyer to make up for that repair, and then the rest of it will be reimbursed to the seller. The other thing I'm going to look at too after that is I'm going to look for any exclusions on the listing. I review the listing in a purchase agreement very carefully to see if there are any exclusions. There isn't always exclusions, but sometimes they are. And a few common things to look for are window treatments and hardware, TV brackets, verify the appliances, attached bookshelves, okay? And just real quick, let me answer the question, what stays with the house? I put property into two different categories, and that is fixtures and chattel. A fixture is defined as any item that was permanently attached to the structure or to the property. So a couple examples. The chandelier in the dining room, that is permanently affixed to the ceiling. That is a fixture. Another one, which a lot of people don't think about, is the rose bush outside in the landscaping. That is also the bush and its roots are permanently attached to the land or to the property. I know a lot of people say, someone gave me that rose bush 15 years ago. I want to take that rose bush with me when I move to my next house. Well, technically, we need to exclude that. And we can totally do that. That's perfectly acceptable. We can write that out. But that is permanently attached to the land by the roots. The chandelier is permanently bolted to the ceiling in the dining room. See what I mean? So a fixture is anything that's attached. Bookshelves that are permanently attached to the wall. Cabinets permanently attached, right? Those are things that you just can't pick up and move around easily. The other part of personal property is called chattel. And chattel is any personal item that is not attached. Fixtures must stay with the home unless otherwise excluded in the listing or on the purchase agreement. All chattels must be removed by the seller by closing or by the key exchange if there's occupancy. So, an example of something that is chattel would be that lamp sitting on the nightstand or the nightstand itself because it's not permanently attached. Okay? And in purchase agreements we have where the seller needs to take all their personal property with them. And something that we've seen before too, and we'll kind of talk about this in another episode with final walkthroughs and things like that, is that the seller, like, you can't leave that pile of bricks in the back corner of the garage, right? That's technically chattel. It's not attached. That needs to be cleaned out. That needs to go. So anyway, so we have fixtures and we have chattel. So getting back to our preparing an offer, I look for anything that is going to be excluded that is a fixture, and we need to put that into our offer to recognize that for the seller so that they see that we have put in writing that we will exclude that that one item that they want to keep. And another example is, I'm going to use the dining room chandelier again. Let's say it's a really nice Tiffany chandelier. It's absolutely beautiful. Maybe it was a gift or a special purchase, and the seller says, hey, I want to take that chandelier with us. They will write that in as an exclusion in the listing, and then we will recognize that exclusion in our offer, in our purchase agreement. And then that way they get to keep that, and we know that we're not keeping that. Make sense? The next item that we're going to talk about is earnest money deposit. With any offer that we submit, the buyer needs to have an earnest money deposit that comes with the offer. So what is earnest money deposit? This is one of those things that we that we hear the term all the time, but a lot of people don't quite know what it does or exactly what it is. So earnest money is an amount of money that you're going to, once the offer is accepted, that you're going to bring with the offer. So we typically like to see about 1% earnest money come with an offer in comparison to the sale price, but it can be any amount that you like. But first, let me define what earnest money deposit is. At its core, the earnest money deposit is legal consideration for a binding contract. That's the boring part. However, it does serve a couple of other functions. The EMD is used to compensate the seller if the buyer walks away from the transaction for a non-justifiable reason. Okay? This is why the amount of EMD is important. A strong amount of earnest money indicates that you, the buyer, are, one, making a serious commitment. It also reaffirms to the seller that you have ample capital on hand, or that you have cash on hand, that you're a stronger buyer. Now, that's the real basic description or definition of earnest money. Let me put it into an example so that you understand a little bit better. So we have a house that's for sale at $300,000. Normally for earnest money, an average amount, we like to see at least $3,000 to come with our offer as an earnest money deposit. Now that would be in a standard normal balanced market. If it is competitive, we would like to raise that earnest money deposit just as a stronger show of your capital resources and also your commitment to the transaction. Like I said, the function of this is to compensate the seller if you, the buyer, walk away for a non-justifiable reason. Now, this brings up a couple of questions. So, Bryan, if I give this earnest money deposit along with my offer, can I ever lose my earnest money deposit? Or what circumstances would I lose my earnest money? That is an excellent question that I get all the time. So let's just kind of briefly walk through the process real quick. So we write our offer and we say, upon acceptance of our offer, we're going to give for a home that's $300,000, say $3,000 earnest money. Okay. Now, if we have the home inspection and there's something really bad with the house, there's a bad foundation, there's a lot of mold in the attic or something like that, and we can't negotiate that, if we cannot negotiate the home inspection and the deal falls apart, you, the buyer, still keep your earnest money deposit. If we have a good home inspection, everything is fine, we go to appraisal, and let's say the home is wildly off on appraisal and we can't negotiate a settlement to the difference in the appraisal value and the deal falls apart, you, the buyer, still keep your earnest money deposit. Okay. If we're good with home inspection, we're good with appraisal, and we're moving right along, and let's say, unfortunately, husband and wife buyer, one of the spouses gets furloughed, they lose their job, and they no longer qualify for financing, and the deal falls through, you, the buyer, still keep your earnest money deposit. Okay. All right, Bryan. So when would I lose my earnest money deposit? Here's an example. We're good with home inspection. We're good with appraisal. We're good with the financing. We're 3 days from closing. And then you just change your mind and say, you know what? I don't want the house. I'm walking away. Boom. Now you're going to lose your earnest money. It's only for a non-justifiable reason that you would lose your earnest money. In fact, in more layman's terms, you really kind of have to try hard to lose your earnest money, okay? And another feature of earnest money is, where is it held during the transaction? Because what we have in our purchase agreement is when we submit the offer is we'll bring the earnest money upon acceptance. So the average amount from accepting an offer to close with standard financing is about 30 days, okay, give or take. So where does that money sit during that 30 days? Well, the agent, the buyer's agent, in this case myself, I would collect that from you after our offer was accepted, and then I take it to my broker, and it's held in escrow throughout the time of, while the home inspection, appraisal, underwriting. You're right. While the whole transaction is moving forward, it's held in escrow by the broker until the closing. When we get to closing, then that earnest money dollar amount will be applied toward your closing costs. So the money just sits there and holding, applied to your closing costs at the end. Now, when we talk about submitting offers in a competitive market, why would we want to have that higher earnest money? And I'm going to kind of come back to the beginning of that is, a good show of capital resources. So if we have a $300,000 house and we submit $10,000 in earnest money deposit, that's a really good show of confidence to the sellers. Like, okay, these people have capital resources. They're making a very strong commitment to this transaction. And it also says, let's face it, $10,000 would be really hard to walk away from. So having a really strong earnest money amount is really, really important and is a really strong showing. So in another episode, I'm going to be speaking with a loan officer. I'm going to be interviewing him, and we're going to be talking about the different types of financing and the features and benefits of those. But for the purposes of our discussion today, I do want to, since we're talking about strength of offer, what is the strongest offer that we could come in with? And of course, that would be cash. Cash is king. But why is cash king? And I just want to explain this really quick. Well, the reason why we like to see, in general, we like to see cash over any kind of financing is because it's a very streamlined process, right? You have a checkbook, you have the funds, and you can purchase this house straight up. We don't need to rely on the bank. We don't need to rely on an appraisal. We don't need to rely on underwriters. It really cuts out a lot of the banking bureaucracy because there is no banking financing involved, right? There is no lending. So cash is really great. When you have a cash offer, what we do instead of a pre-approval letter, we show proof of funds. So we show a bank statement and we redact anything too personal, but we show a bank statement that says, okay, my buyer has the capability to purchase this home cash. And here is, instead of a pre-approval letter, here is the proof of funds that we can do this. So we demonstrate that to the listing agent and to the seller. But that's really why. And because we're not waiting for appraisals and underwriting and things like that, the transactions go very, very quick. So cash is king because we don't have banks, we don't have appraisals, and generally we can close a cash sale within 2 weeks, 2.5 weeks. It goes very, very quickly because all we're waiting for is title work and a home inspection. That makes sense? So that being said, since we're talking about submitting an offer, what would be the most competitive offer? Of course, cash. You're listening to the Bryan G Real Estate Podcast. If you'd like to learn more about me, check out my YouTube channel, Bryan Gutierrez, Keller Williams Real Estate, or go to my Facebook page, Bryan Gutierrez, Keller Williams. And if you want to hear more of this podcast, please subscribe. Now back to the show. So we have our offer, and for this discussion today, let's say we have conventional financing. Okay, pretty standard stuff. So we looked at the listing, right? We looked at occupancy. We looked at any exclusions. We talked about what would be a strong earnest money deposit, what the merits of that would be, and what is within your budget and capability to submit there. So now let's take a look at some other features that we can build into the offer that can make our offer stronger. One very good thing that we can do, which is great in a competitive situation, is that you, the buyer, can offer money towards the seller's closing costs. This is one of the strongest moves that I think we can make, okay? And not all agents are really aware of this, but this is something that has worked really, really well for my buyers. And I'm going to say it one more time. The buyer offering money towards the seller's closing costs. This serves two functions. One, this is a guaranteed net benefit for the seller on top of the sale price. And two, it raises the net proceeds for the seller while reducing the risk of pushing the house out of appraisal range. Let me give you an example. We have a house for $300,000, okay? It's competitive. We want to offer more than $300,000, but when I run the comps, I say, okay, this house is pretty much at its limit at $300,000. We don't know if it's going to appraise more or not based on the comps, but we really want the house. This is the one we want, and we don't mind doing a little extra for it. So what we can do is say, okay, we're going to come in at asking price at $300,000 because that's what the comps are maxing out at. But then we're going to offer, for example, $10,000 in cash towards the seller's closing cost. So what that does is it keeps the sale price at $300,000, so we reduce the risk of pushing it out of appraisal range, but it's the equivalent of the seller receiving an offer for $310,000. Does that make sense? Because that cash is saving them that money in their expenses. It can go towards the seller's transfer tax. It can go against the commission that they're paying. It can go for any other allowable fees and expenses that the seller has. So it's really raising the seller net by that dollar amount without pushing or risking pushing the home sale price out of appraisal range. So this is a really strong feature that we can build in that a lot of sellers like. And this is a guaranteed benefit. This is not a maybe get this money. This is us saying, here's our offer, and we will bring this extra, in this case, $10,000 on top of asking. So it's a guaranteed net benefit to the seller. Sellers really like that one. Now, based upon your budget, your means will determine whether we can offer extra cash towards the seller's closing costs or not. It may not be good for you to do so. It may not fit your budget, right? That might be money that would take away from your down payment. And one very important detail about this buyer, if you're bringing this extra money to closing, this is in addition to your other closing costs. Okay, I want to say that again to be very clear about this. If we offer money towards towards the seller's closing costs, this is money that you're bringing in addition to your established closing costs. Okay, so we really need to make sure that this extra money is something that we can afford and that we can bring to this offer. So let's talk about the appraisal. For our example, we're using conventional financing, which is going to require an appraisal of the property, and that is simply the bank sending a service out to evaluate the value of the home to make sure that it equals what the loan amount is going to be. That's what an appraisal is. It's establishing and verifying value or verifying the sale price. Now, there's a couple things that we can do here. If we're in a competitive situation, we can tweak this appraisal process a little bit. The normal order of things is, say, conventional financing, most lenders will wait to order the appraisal until we've had the home inspection. Because if there's an issue that comes up during the home inspection, the price of the house might change, right? If we find a real major concern with the house, we might negotiate, say, $2,000 or $5,000 off the sale price to make up for that home inspection item, right? That could change the sale price. So most lenders will wait till after the home inspection to order the appraisal. Now, to be more competitive, if we're in a competitive situation, what we can do is we can order the home inspection right away and the appraisal right along with it right away. Okay. And this will help to ensure a faster closing. Okay. Because we're not waiting that 7 days for the home inspection, 2 days to reply, maybe a couple days if the seller needs to reply, if there's something we need to negotiate, right? That could easily bump out 10 or 12 days. And then order the appraisal, which would add on to that time. So if we order the appraisal and a home inspection right after the offer is accepted, well, that's a benefit to the seller because we'll close quicker. Now, not all sellers need to close lightning speed, but in a competitive situation, that shows the seller that, hey, we're taking a lot of initiative here. We're very confident in your home and the way you priced it. And as a show of our confidence, we're going to order that appraisal right away along with the home inspection. So that's one way that we can be more competitive than someone else. And with the appraisal, there's always a risk that the appraisal could come in under the sale price or the agreed upon sale price. So if we're at $300,000, there is always a possibility that that home might appraise for $295 or maybe for $290. It all depends on the market and the comps that the appraiser is running. You know, what are they comparing the subject home to, which would lead them to that conclusion. Now, if the house is $300,000 and the home appraises at $290, the bank says, hey, the home is worth less than what we're willing to finance, so you guys need to work something out. And that is exactly what we do. So, we agents speak to our clients, and now we begin to negotiate. There's a few different options that can come into play here. The buyer can say, great, we love the house so much, we're just going to bring that money and make up the appraisal gap, right? It's $10,000 low, we're just going to do it. Or the seller can say, hey, we recognize that we overpriced the house, we're going to lower the sale price to that $290. Or, and what happens most often is that the buyer will bring, say, $5,000 to the table. The seller will come down $5,000. We kind of meet in the middle, and then we agree upon that, and then we move forward from there. So, but what can we do to get our offer, to make our offer more attractive before we even get to the appraisal? Because we're not accepted yet. We're submitting an offer, okay? Well, there's a thing called appraisal gap guarantee. And what we can do is with our offer is that we can say, we write into the additional comments that the buyer is willing to guarantee, for example, up to $10,000 to help close an appraisal gap in value. Okay, so going back to our example, if the home's at $300,000 and it appraises at 290, we can write in that appraisal gap guarantee where the buyer will automatically make up that 10,000, but not to exceed the sale price, right? And this is not what the actual clause would say. It's much more official wording. This is just a summary of what the clause is. So to get back to that, um, we have a house for 300,000, and we say, hey, we're going to come up with an appraisal gap guarantee of 5,000 or $10,000. Sellers like to see that because if the appraisal is off by a little bit, that means that we're going to come in and we're going to make that up automatically, and that saves a lot of negotiating later. Now, if we are going to offer an appraisal gap guarantee, this is something that we also want to consult with the lender to make sure that this is okay. Because if your pre-approval is based upon how much money you have in the bank, we can't just promise that, hey, we're going to give 10 grand here, 5 here, right? if this is where where your pre-approval is based on, right, we have to work with the lender, because in the end, the lender needs to approve. The lender needs to approve because this is where the money is coming from. But an appraisal gap guarantee is an excellent feature. It's something we do see a lot that does make sellers happy to see because, yeah, if the appraisal comes in a little bit, the buyer's going to guarantee X amount of dollars to make up that gap. Now, there's another thing we can do with appraisal, and that is we can waive the appraisal altogether. Now, this involves a high level of risk, okay? Is it the most competitive thing we can do? Absolutely. We as a buyer can say, hey, we have conventional financing, but we're going to waive the appraisal. No matter what this property appraises at, we're going to make up the difference. Okay. Can you do that? Absolutely, we can do that. However, if that appraisal comes off by a lot, then you're on the hook for it. So if we're at $300,000 and you waive the appraisal, say, hey, we're going to take care of the appraisal no matter what, $300,000 and it appraises at $275, guess what? You are bringing that extra $25,000. If we're at $300,000, appraises for $250, you're bringing the $50 in addition to your closing costs, okay? Now, those are kind of big examples just to make the point, but it can happen. So if you have a lot of cash on hand, again, you really want this house, you really want to lock it down, you can say, hey, we're going to waive the appraisal entirely. That can be done. And of course, sellers love that because they know that appraisal is covered no matter what the amount is. So with every conventional financing transaction or traditional financing that we have the home inspection. And every sale is contingent upon a satisfactory home inspection. In a competitive market, we can offer limits to what would be unsatisfactory to demonstrate that we're not going to be fussy about the home inspection. One thing that sellers really fear is that they're going to get nitpicked at home inspection. Okay. Oh, you got this foggy window pane. Oh, you have this thing over here. Oh, the furnace is old. Right. These are things that sellers just dread at the home inspection. Okay. And we're going to have another episode where we deep dive into home inspection and what is expected and what isn't and what we should ask for and what we shouldn't. We're going to do that in a different episode. But for our discussion here today, we're talking about submitting an offer and how can we make the home inspection more attractive to the seller. So a couple things that we can do is that we can put in a couple conditions on the home inspection. For example, we can write into our offer something like this. We will not ask for any repairs or concessions regarding any individual item on the home inspection under, say, $4,000. Okay, that definitely demonstrates that we're not going to nitpick. All right, so you, the seller, looking at that, and it's like, okay, I feel much better about this because this better be a roof, this better be a furnace or a foundation issue, because they're not going to ask for any individual item that is under $4,000 to repair, right? Can you see how that makes the seller feel really good about that? We can also make a statement in there too. If we don't say something that specific, we can also add in a statement that's similar to, we will not attempt to negotiate anything from the home inspection unless it's a health and safety item. If there's an excess of radon in the house, Okay, because that's a health and safety thing. If there's mold in the attic, that's a health and safety thing. See, so once again, each property, again, being so unique and different, determines on how we'll approach our offer on this. But see, even with the home inspection, we can have a short inspection window, which sellers like because things move more quickly. We can also, put a dollar amount on things that we would negotiate. Sellers like that too. And then we can also write in that, hey, we're only going to look at health and safety issues here. We're not going to bring any other nitpicky things to you sellers. So these are some things that, again, depending on the property, we can build into, and the condition of the property, that we can build into our home inspection to make that more attractive to the seller as well. Now, kind of like waiving the appraisal, we can waive the home inspection. I do not recommend this, okay? Is it possible? Yes. We can put it off, or we say, hey, we're not going to have a home inspection. We just want the house. We're going to go right to appraisal. Okay, this is very, very risky because even homes that are newer construction, even homes that are modern construction, there is always something wrong with the home, and we don't know because we haven't gone up on the roof on our regular showing, right? We don't crawl into the attic. We don't get into the crawl spaces, right? We don't know. There might be a serious foundation issue tucked away in a corner that we didn't see on our walkthrough. There could be a ton of mold in that attic, right? So can we waive the home inspection? Absolutely we can. Is it very risky for you, the buyer? Absolutely it is. It's one of the riskiest things that you can do is waive the home inspection. Now, there is one example where waiving the home inspection would make sense. And that's if we're buying an extremely uh, distressed property and you're just going to knock the house down, you're really buying it for the lot and you're going to build your own, well, then of course we don't need a home inspection, right? If you're going to knock it down, build new, we don't need a home inspection because that thing's being bulldozed anyway. That makes sense. But in any other property where you're not going to tear down the house, waiving a home inspection, it is a thing we can do, but there is a very high level of risk. So if you're sitting on a pile of money and you don't care, great, we can waive it. But just be prepared. Something may or may not come up. Okay. Another feature that we can build into a buyer's offer is something that's called an escalation clause. And this is used a lot when it's a competitive situation. And I have to admit, I'm kind of conflicted about this. Let me explain what it is first, but I'm not a big fan of the escalation clause. I'll tell you why in a minute. So, what an escalation clause is something similar to the effect of the buyer will offer, for example, $2,000 over any competing offer up to a certain point. So we have, let's go back to our example of a home that's $300,000 and we're willing to pay a little bit more for the house, right? Let's say we're willing to go 10 over. So what we'll write into the offer with an escalation clause, and this is not the exact wording, but here's the gist of it, is that, okay, the buyer's willing to go $2,000 over any other competing offer up to not to exceed $310,000. Okay, because you have to have a limit on it. If there's no limit, that can keep climbing, right? So, but that's what we would do. So up to 310,000, we'll go 2,000 over any other like bona fide offer that's come in. Now, this is interesting because I've had a lot of agents who, like me, do not like the escalation clause. And when you're in a competitive situation, if you get 5 or even 10 offers that come in on a house and you're the listing agent and you're pouring over all these details, some people have appraisal gap guarantees, there's home inspection details, there's earnest money deposits, there's all these things going on. And then you get this escalation clause that says, oh, we're going to go 2,000 over any offer up to like this point, blah, blah, blah. Well, it can really kind of be annoying because if we're in a competitive situation, which is the only time we would use an escalation clause, if you're willing to come in at 310, just come in at 310. You're always better off coming in with your highest and best because, again, going back to the beginning of the discussion, we want to come in with a good, solid, clean offer. Escalation clauses to me are messy. I don't really like them that much. And a lot of people don't even do $2,000 for an escalation clause. A lot of them are like, we'll do 500 more than a competing offer or $1,000 more than a competing offer. Well, think about this. If you're at a 300,000 price level or greater, what's an extra $500 than any other offer? It really isn't, right? It's a tier in a salted sea, right? It doesn't even get noticed, an extra $500 or maybe even $1,000. It really isn't a significant enough move to really warrant putting in my opinion. Now, buyers have asked me, "Hey, can I put in an escalation clause? I really want to." Sure, I'll put it in there. I obviously I know how to do it. We can word it properly, right? We put our limit in, but really, honestly, if we're in a competitive situation, you're really better off just coming in at your highest and best, and let the offer stand or fail on its merits, because you're saying in an escalation clause, I'm willing to go here, but I'm going to do it in all these different steps. And like I said, there's a lot of listings where sellers have asked their agents to put in the remarks on the listing, we won't even look at an escalation clause, don't even bring it to us. And it's for that reason. So yes, it is an option we can do. Have I done it? Yes, I have. Do I like them? No, I don't. We're better off just coming highest, best, clean, strong. That's always the best way to go into any situation. Now, something else that people ask me about all the time is the personal letter to the seller. Now, in competitive situations, it's a good thing to remind the sellers that the moving experience is much more than merely pricing, buying and selling a house, right? But we do not want to include any photographs or any details that are too personal. Okay. Keep it focused on how much you would love to be at the property, how this would be the perfect home for you and your family, if that's the case, the lifestyle that you'd be living that you can't wait to be into. Okay. Because here's something that we think about. And some states do not allow a personal letter from the buyer to the seller. Now, why would that be? And it really comes down to a fair housing thing. And this is why I'm kind of saying we don't want to put too many personal details into our letter to the seller. First of all, if you insist on sending it, I'll send it for you. That's not a problem. But what I'm going to advise you to do, and I'm going to recap on this, is to say, it'd be so great to live here. I can see my family living here for generations. I can see how well you've cared and loved this property. We want to continue that tradition as the new, owners of this property, right? Details like that. It's going to be so much, better lifestyle for us. These are the kind of things we want to put into that. Again, to remind a seller that's not just about dollars and cents, right? It's more than just acquiring and liquidating an asset to our buyer. This is about, hey, we're starting a whole new life here, and this is so perfect for us. That's what we want to put into it. Getting back to why some states don't allow the personal letter is quite honestly because of fair housing. It has happened, not often, but it has happened where a seller has read the personal note and the seller could say to themselves, and this is not right, I'm not endorsing this, but a seller could look at them and be like, you know what? This person doesn't sound like me. That's a problem. Okay. Or if someone includes a photograph in there, this person doesn't look like me or doesn't look like my neighborhood, right? See where this can go drastically wrong? This is why some states don't even allow the personal letter. And a lot of agents won't even submit that letter with the offer. We agents are obligated to give the offer, the purchase agreement, any features, conditions that we've written into it, pre-approval letters, right? We are obligated to present the offer. We are not obligated to submit a personal letter because that's not technically part of the transaction. And that is a really big reason why. Now, some personal letters have worked great for buyers. Like I said, I've submitted them for people before, and we've been at the closing table, and I've had sellers say, "Oh, your story was so wonderful. Oh, we raised our family there, and we're so happy that you're raising your family there," right? I mean, personal letters have worked, absolutely. But can they backfire? The answer is yes, they can. Will all agents allow that letter to be given to their seller? No, because a lot of agents don't want the seller to be making an emotional decision. This is still a business transaction. Although there's people involved, although it's a very personal process, this is a business transaction. A lot of agents want to keep their clients focused on the business part of this and not make an emotional decision either for or against. Does that make sense? So the personal letter to the seller is kind of a two-edged sword. That can work for you, that can work against you. Okay. Be it good or bad or justified or not. Okay. So now, um, so now I'm going to start throwing some of these things together, and let's see, so you can kind of get an idea. Now that we've gone over all these individual parts, I'm going to start putting them together to kind of show you how an offer might come together. And this might help illustrate this a little bit better. Now, before I do this, okay, there's one thing in a competitive situation that I consult all my buyers on before we even get into this and say, okay, we found the one, we found the house, it is competitive. We want to do everything we want to get this home. However, we have to be careful that in a multiple offer situation that we don't get too caught up in the win. Okay. And what I mean by that is this: we need to avoid the auction effect. Why do we have auctioneers? Right? Oh, here we go. I have this amount, that amount. Da, 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 da. It's really exciting, right? When you go to an auction, it's like, okay, I'm in for that. Someone else outbids you. I'm gonna up that, right? You kind of get caught up in the win and going for it and the excitement, right? And not that I want to, not that I want to throw a wet blanket on anything, but again, this is a business transaction. And it's like, okay, this is the one. We really want it. We're going to be aggressive. We're going to go for it. But let's not get so caught up in the win, air quotes, that we do something that's going to give us buyer's remorse 6 months later. Let's not throw so much money that at it in the beginning that 6 months later where we've depleted our cash reserves. I always advise to never be mortgage poor. Okay, because there's a lot more of life going on. And so as we're putting things together to be competitive, and yes, we want the house, and yes, we want the win, I'm always going to give you that reminder as we're talking about putting this offer together that it needs to be, please stay in your budget, stay in your timeline. This has to be good for you. And it's not just about winning the deal. We have to look beyond our present circumstance. So we need to look at 6 months, a year, 2 years, 5 years from now. Is this going to be good property for you? So this is always in this process when it's competitive. I stop, have us all take a breath, remind everybody of that, and then we begin putting our offer together. Does that make sense? So now let's just kind of go through a practical way where we might kind of throw these things together. So we have our home, $300,000, and this is the one we want to go for it. We want to, we know it's a competitive situation. So what are we going to do? So we'll talk about a few different things. First thing I'll ask is like, hey, do you want to throw some money towards the seller's closing costs? Say $5,000. So we have an offer of sale price of $300,000. We're going to offer $5,000 towards the seller's closing costs, which is a good benefit to them. And we'll offer an appraisal guarantee of $10,000. So if it comes low, we'll be willing to make that up. And instead of 7 or 10 days from the home inspection, we're going to perform the home inspection within 5 days. And guess what? We're only going to ask for or attempt to negotiate any items that are health and safety related. Okay? Like, that's a really good example of a really good offer, right? We've offered an appraisal guarantee. That's a reasonable amount. We've offered money toward the seller's closing costs. We've shortened the home inspection time, and we've limited that home inspection to health and safety issues. See what I mean? Now, every situation is unique. Every property is unique. Any combination of these things will work. Okay, so maybe another example that would be like, okay, so sale price of $300,000. We don't have the cash to give money towards closing, but let's come in with an offer at $310,000. Okay, so sale price of $310,000, and we're going to do a nice quick home inspection, say 5 to 7 days. Great. And this, we're going to say that, we will not attempt to negotiate anything for a home inspection for any individual item that's under $4,000. Okay, that's good. And we'll offer an appraisal gap guarantee since we're going 10 over asking and the comps were kind of high there. Okay, let's say we'll do an appraisal gap guarantee of maybe 15,000. Okay. Okay. And then, so that's another way that we can put it together. So if we can't do cash towards closing, we can up the appraisal guarantee and that would help. Now, there is absolutely nothing wrong with saying, all right, we don't have a lot of cash to do a big appraisal gap guarantee. We can't give money towards closing costs. Hey, that is okay. All right. Not everyone has a large bank account with that kind of extra capital. Okay. So we can still come in. If the home is at 300,000, let's say we come in at 310. All right. Well, what are some things we can do? Well, we cannot do an appraisal guarantee. That's okay. We can't do money towards closing costs. That's okay. But what can we do? Let's go back to that home inspection now, right? All right, so let's do the home inspection. We're going to, limit the thing to just, or the scope of it to health and safety issues only. Okay. And we're going to offer free occupancy. The seller needed to be in the house for 2 weeks. So we're going to offer free occupancy because we can't offer some of the other features like appraisal gap guarantee or money towards their closing costs. So we're going to do a nice, quick, limited home inspection and free occupancy for the 2 weeks that they need. Well, that's great. And of course, with the free occupancy, I didn't mention it before, but you could add that to an appraisal gap guarantee, right? All these parts are interchangeable. And once again, it comes down to the individual property circumstance because every situation is unique, what your capital reserves are. So really, we can plug and play any of these features into here. And one thing that I do before I write an offer is I do call the other agent and say, hey, we just had a great showing at your property. We're going to be bringing you an offer here in a couple of hours. I just want to ask you what's important to you and what's important to the seller so we can tailor our offer to what you guys need. Okay, that's something that a lot of agents don't do. That's something that an experienced agent like myself does do. And then that's what I've had is some listing agents say like, hey, we're really good on the price. Of course, come in strong on price. Everybody says that. But you know what? We put 2 weeks occupancy, but it'd really be helpful if we could have 3, right? They wanted to attract it to the buyer, so we put in 2. But if you can give us 3 weeks occupancy, that'd mean a lot to the seller. Or, we also want to see a higher EMD amount. Okay, that's important to demonstrate a strong buyer. So you're like, oh, okay. So when I have that conversation with that agent, and experienced agents will talk to each other, now I can come back to you and say, hey, they want more than just a 1% earnest money deposit. So let's go, $10,000, earnest money, and let's give them free occupancy, and they need another week. So let's just write it up with 3 weeks free occupancy. Even though we can't do these other features, we can do that, right? Or if we can write the ultimate offer and say we'll give money towards closing, 3 weeks free occupancy, $15,000 earnest money, right? I mean, all these things, right? Depending on what your resources are and what your capabilities are, all determines on how we can put this together. So really there's almost an infinite number of combinations that we can do here. And no order of combinations of any of these features are really right or wrong. We just need to structure an offer that is right for that property and right for you. So I hope this is really helpful to define what all these key features are in an offer. And once again, this is not only beneficial to a buyer who's going to write an offer, but this is also beneficial for a seller who's going to be receiving this offer. So this is good for both buyers and sellers to be familiar with these terms and to understand what these terms mean and the combination of what these terms mean, to have a true understanding of it. And that way to be a lot more clear when we sellers go to evaluate an offer, and buyers, this really helps us put our best foot forward. So once again, in another episode, we're going to talk about the entire buying process. Today was just about putting together an offer, what some of the main offer features are. As a reminder, every property is unique, every property is different. Same thing with our buyers and our sellers. So any combination of these things we can put together to help you present a great offer to the seller and get that dream home that you've been looking for. If you have any questions about this, please contact me anytime. Thank you so much.